Yes, yes, yes.
Let's just start with psychology. The the truth of the matter is, in terms of psychology, before you even get to the psychology aspect of trading, because if you don't have a working system, what are you trying to work on your psychology on when you don't have a working system? So psychology usually comes when one, you have a strategy with an edge that you've actually back tested and you found out that okay, this particular stuff is working. You must have a strategy first with an edge in the market. You understand? You must have a strategy. And then after having a strategy that you've back tested, you must have good risk management. So before psychology comes, you must have a good trading strategy and then you must have good risk management approach when it comes to trading. Then when you have those two things in place, now what your psychology helps you do, your psychology enables you to be able to execute that strategy that you've back tested consistently and effortlessly. That is what your psychology helps you to do. Psychology in trading helps you to be able to execute the strategy that you had, that you've back tested consistently. The psychology helps you to be able to execute that strategy very well. Because most times the problem most people have is they don't know how to execute a system consistently, because we can be two or three in number that are using the same strategy, the same parameters, the same everything, the same risk management. But I can confidently tell you that out of those three of us now that are having that same strategy, three of us won't be profitable at the same time. We will have different results. We would have different results entirely from each other. Just give me a sec. Coming. Okay. You can hear me, Abby?
Yeah, yeah.
Okay. Okay. So talking about the psychology. So I was saying that three persons or four persons or five persons can have a strategy. They can have the same strategy, the same entry confirmations, the same everything. And then they will also have the same risk management approach. They can decide to be risking 0.5% of their account per trade, or they can decide to be risking 1% per trade. But let's say five of us now we have the same strategy, and five of us are risking 0.5% on each particular account on our accounts. So we are using the same strategy, we are using the same risk management approach, 0.5% per trade. I can guarantee you that five of us will not have the same result at the end of the week, or at the end of the month, or at the end of the year. Out of five of us, I can also confidently tell you that probably only two or one of us will actually be profitable following that particular trading strategy and that same particular risk management, because of what? Psychology. So psychology plays a very, very key role in trading, but you can only work on the psychology when you have a trading strategy and you have risk management in place. Most persons, I don't know, like, but it's out there, like most persons they always complain I don't have the right. They say that psychology plays is 80% of psychology controls 80% of your trading. That can be true, that trading is 80% psychology, 10% risk management, and then 10% strategy. But I can confidently tell you that psychology is not 80% of trading, because before you will have the right psychology in place, you must have a profitable system in place. For me, from what I've observed, having a profitable trading system with an edge even plays more role than psychology itself. Having a profitable strategy and then having good risk management approach is even more greater than the psychology itself. The psychology, when you have a good trading system and then you have risk management, you can just be here and there, here and there. You'll be seeing some profits, probably some profit, but you won't be consistent. But psychology now is what helps you become consistent. But now you cannot have just psychology alone and risk management and then you don't have a profitable system. There is no way you can even make 1 single cent in the market if you have just psychology and then you have a good risk management. I'm telling you that you cannot make even a single cent in this market. So the most important thing to have is a working strategy that you've back tested, that you have confidence in. Another thing that is very, very important is learning to trust your own analysis, learning to trust your own trading approach, learning to trust your trading strategy. And trust, that trust in your trading system comes from you repeatedly doing the same, comes from experience actually. Just experience is just the key word. You having very good confidence in your trading system comes from having experience in the market. So, talking about psychology, you will need a very good trading strategy. You will have a good risk management approach. And then that is when psychology comes in place. Psychology now is what helps you to consistently execute that strategy flawlessly. If you've ever listened to Mark Douglas, you will understand that profitability comes in this market when you are able to repeat the same thing effortlessly without making mistakes. Let's say you have your strategy written out in either PDF format, or you have it written out in your Excel, or you have it written out in a sheet of paper. And then you follow that trading strategy consistently, like you follow it to the teeth. You don't make any mistake in your execution, because I've been there. That is why I'm trying to speak from experience, where I have my strategy written out. But let's say I enter the week to trade. That particular week now, you see that I will be taking trades, some trades randomly out of place. I'll be taking trades out of my trading strategy, because I've had some other ideas of how other stuff work. So if I don't see my strategy, I will now use the previous knowledge I had, and then I try and enter the trade with that kind of uh, mentality, or with the former strategy I've had. I will now use that one now to enter the trade. So psychology now is what helps you to follow your trading strategy to the teeth. You don't make any errors. And I can guarantee you that if you follow your strategy to the teeth without making a single error for your next 10 trades, that is why we have the 10 trading rule. We have what we call the 10 trading rule. It will really, really help you guys. If you have your journal in place, journaling is very, very important. Those are the things that helps you and that helps your psychology too in trading. So you have your journal, and then what you want to focus on in this journal is executing your strategy only, flawlessly, effortlessly, without zero mistakes for the next 10 trades. You trade in sample sizes. So your first 10 trades, you make sure that you trade them without errors. You trade them consistently. If it's New York session you're trading, you focus just on the New York session you're trading and trade it. If you're trading both London and New York session, you focus on your London and New York session and trade it consistently. If let's say your entry confirmation is SCOB, focus on SCOB alone in that London and New York session and trade it consistently for your next 10 trades without making a single error. If you're able to do that, that is when you say that, okay, you've now been able to build your psychology. That is what psychology is all about in trading. Like, I'm not even capping, I'm not even kidding any of you. Most people, they just hear psychology, but they don't actually understand what psychology is in trading. Psychology in trading is you being able to have a strategy, being able to have a good risk management in place, and then you being able to execute that trading strategy and that risk management approach consistently without any errors. That is what psychology is. So psychology helps you to be able to execute without any errors. So once you're able to just tell yourself that, okay, I have a strategy, I've decided to take 0.5% risk per trade, and then you go into the market on Monday, and then you go on your London session, you take your strategy trade without any errors. You write it down. Trade one has been taken. You write the reason why you took those trades. You keep them down. If you can take your screenshots, you take your screenshots. Then you wait for another entry. Entry two, the same thing. The same entry you took for entry one, record it. Entry three, the same thing you did for entry one and entry two should be the same thing. There should not be any form of mistake, or there shouldn't be any form of misconception when you're taking. They should be the same thing from your trade one to your trade 10, should be the same thing. So once you've done that, after your first 10 trades, you now go back on your trading sheet or your journal and look at your first 10 trades and see if they have the same pattern of entry. So if they have the same pattern of entry and you've executed them consistently, then my dear, voila, you've been able to conquer trading psychology for those first 10 trades. So from those first 10 trades, you will now review. If you were able to make profit out of those 10 trades, you were able to make profit, you came out profitable out of those 10 trades, executing your strategy consistently, then you should know that your trading system is actually working. But if after your 10 trades you ended up in a loss, then that means you need to refine your strategy. I don't mean changing your strategy, I mean refining it. You will now, from your data now, you will now be able to look, okay, what was the error I made? This what happened in London session? Maybe London session did not favor you very well. You look at New York session. If the little wins you had were in New York session, you will now look at, okay, why did I have these wins in New York session? What did I do separately? What didn't I do separately? That kind of thing. You compare your results and see what you've done right for those 10 trades, or from the winning trades you've had out of those 10 trades, and then you focus on that and build on that. That is what is called the 10 trade rule. So once you're able to do that, you see that you've been able to build your trading psychology because you've been able to follow a system to the teeth without making any errors. So in trading, that is what psychology is all about. Being able to have a trading system, having a good risk management, and then trying as much as possible. What I mean, trying as much as possible not to violate any of your rules, not to let FOMO get in your way, because those are all the things that can make you have your trading errors. That is why I said executing your trades without error. When you have FOMO, fear of missing out, if the trade has not come to your entry zone, you're trying to, because you feel like the market wants to buy, but since the market has not come to your entry zone, you just want to buy because you're seeing some kind of confirmations. but the market is not on your zone where you're looking to buy. But because it is printing some kind of bullish candles, you just want to enter the market. That is you violating your rules, not following your strategy. That is you breaching your psychology. And then you ended up taking that trade, and then you lose it. It will start affecting you mentally. So what I mean is that you follow your strategy to the teeth without making any errors. Once you're able to do that consistently for your first 10 trades, after that, if you made profit, you move again to the next 10 trades. You repeat the same process. Take your next 10 trades sample, take them consistently without making any errors. I can guarantee you that if you're able to follow your trading approach or your trading system without making any errors, and your entry criteria, they are all looking alike, my dear, I'm telling you that you've been able to build and overcome trading psychology. But in a system where you don't have any form of trading strategy that is working, and then you don't have good risk management, there is no way you can have a good trading psychology. It's not possible. And there is no way you can even form psychology when you don't have a system and you don't have risk management in place. So there is no way you can have a psychology in trading. The only way you can have good psychology is when you have a trading system, you have your risk management in place, and then you are able to consistently trade that system in your next 10 trades without making any single errors. That is when you start seeing improvement in your trading. So I don't know if this has been able to clear the air in terms of trading psychology. If anyone has any questions about the trading psychology I just explained, you can ask. Any question on trading psychology?
I don't think there's any question. If they have question, they will ask. There's a comment section for them to ask any
Uh,
question.
all right,
Just proceed.
all right. So let's proceed. So yeah, we talked about psychology and entry confirmations. So now entry confirmations. Talking about entry confirmations, you will need the price to come to your zone. You will need the price to come to an entry zone. And then as you guys all know that I focus on just these patterns alone when I trade gold. I focus on just these short patterns, something like this. Or something like this. So let's say this place is a zone. So let's say this place now is a zone. If the price comes to my zone, I wait for the first leg to come into that zone, the second leg to go back up. This is what we call the W pattern. The W pattern. This is when like kind of liquidity is being taken. This is like an inside leg. So these are the two types of W pattern that we have. And then probably when you invert it, it will become an M, either this leg or this pattern. So anyone, this is when you're looking for sells. This is when you're looking for buys. So the way I trade with my candlestick entry confirmations, you all know that my candlestick entry confirmations is normally single candle order block, the SCOB. That is what I use any day, anytime, anywhere, because I know I have back tested it and I know it works, like it works crazily. And so I have confidence in it. And so that is what I use. So let's say we have our neckline here. we have neckline here. This is our neckline, and then we have neckline here. So once we have this first leg touch our zone, you wait for a push up to create the neckline that we are looking for. Then when this third leg starts coming down, once I see this third leg coming down, I start looking for my SCOB. I start looking for SCOB. Once I've seen my first leg come inside, I see this other second leg going up, creating this neckline. Once I start seeing retracement come this, if I want to buy, I start looking for a single candle order block SCOB. So if I get the SCOB, probably SCOB at this point, then at that moment I have this assurance in me that probably the market will not come down here to create this second leg down here before it pushes up. If I see an SCOB around this point, I take my entry based on that single candle SCOB, expecting it to actually take out this neckline here. And then once the neckline has been taken out, I can probably, if I wish to, I can probably add a second entry at this point. So I can add my first entry at this point here, for example, after I see my SCOB confirmation at this point. And then once that SCOB is being able to break this neckline, I can then add, if I want to and if I wish to, I can then enter another entry at that point, my stop loss below that. But if when we are making this retracement, I don't see any form of SCOB until probably get the SCOB confirmation at this leg here, at that level. I'll take my something like this, and then I'll be targeting the next 4 hour zone or something. And then once we have that break at this point, I can decide to take an entry at this break, and then my stop loss maybe below that candle that caused the break, and then I still target the same structure level or the same take profit as the first one I'm targeting. Just as simple as that. So the same thing, I have my first leg come here. Then once I have this push up, I can then, once I see this leg coming down at this point, I can start looking for my SCOB. I can start looking for my SCOB at this point. I take the entry at this SCOB candle, my stop loss below that SCOB candle, and then I look to target any 4 hours level or so. And then once we break the neckline, I can choose to take another form of entry at this point. The same thing goes for when you're looking for sales. Let's say here is the 4 hour zone. We have the first push up, we have the first push down, and the second push down. So once we have this third push going back up, I start looking for my SPOB entries at this point. If I get it at this top here, I can take the entry, target down. The same thing, we have this first leg push up. Then we have a retracement, sell the market to the downside. That on a selling market. But there is another thing. If peradventure I don't want to wait for this have my 4 hours level at this point, and then the market, I have the market is coming down, the market is coming down, I'm looking at the market, and then the market gets into this zone for me to enter. If the market is coming down here and I don't want to wait for this particular market to give me this double bottom entry, what I can simply do is I can simply do this. So once the market gets to this point here, that is where I use my what we call the AMD. I don't know if most of you know what is called the AMD model, the accumulation, manipulation, and distribution. Do you guys know it?
You guys, you guys can answer. Oh. Say something. If you know it, you just say something. If you don't know it, you let him know to explain it. Bro, explain it.
Okay.
Can you hear me?
So like the AMD, yeah, I can hear you. The AMD model is kind of like, let's say we have the Asian Open. If the Asian market is kind of ranging, if we have a ranging market in Asia, something like this, Asia is just ranging, and I'm looking to see Asia finishes rate to range. We'll have London manipulation. Once we have London manipulation clearing the lows of this Asia, let's say we have London manipulation like this, reverse the market here, or the London can probably be something like this. And then once we come inside of New York session, the New York session now will now be the one to push the market up, something like this. That is what I that is what is called the AMD model. So most times I use that just one. I don't wait for double bottom whenever we have this kind of markets, when we have the Asian low. Let's say we have this Asian low now. The liquidity of the Asian low has been taken, something like this. And then we have our zone. We have our zone here. So with that, the AMD model, I know that okay, we've taken out the liquidity of the Asian session, and then the market is now manipulating down to our 4 hour structure level. So if I'm able to see just one single candle order block at this point here, I will just take the entry of the single candle order block without even waiting for confirmations. Once I see the market down at this level here, I just take my entry with this single candle order block. And another confirmation that will even aid me to take the trade more is when we have like the previous day low being swept at that level, what we call the PDH, the previous day low. So if I have my previous day low being swept, and now the market comes down into my 4 hours level, that now I have massive confirmation that okay, we have one liquidity taken, we have another liquidity, because of liquidity at that previous day. And coming to the Asian low also, we have lots of liquidities resting down below. So and then we have what we call the AMD model. So once we have this consolidation in the Asian session, and then we have this manipulation down, taking out the Asian low, taking out the previous day low into a 4 hour structure. That is when I can now start to take my entry. At this point, I don't even wait for double bottom or double top. I just wait for my single candle order block. Once I get it, I'm getting that short entry at this point, stop loss below, and then I'm targeting the next 4 hour structure. That is what I mean by the AMD model. So these are the entry kind of entry confirmations that we have when it comes to trading gold or something or any pair, because it works on all time frame. It works on every pair that you want to use it for. So like a perfect example would be this. Let me clear this and show you guys example of what I mean. For example, that on Friday. So that Friday that happened, we had after, let's say for example, after gold dropped, we had a 4 hours level here. We had a 4 hours level, and then we have another 4 hours level for our take profit. So now, once the market comes to this 4 hours time frame, I go down to the 15 minutes time frame or the 5 minutes time frame as I want. Then now you can see we have this point here. This session here is my Asian session. This is my London session, and then this is my New York session. So we have liquidity, the Asian liquidity resting above this point here. I have my Asian session liquidity here. And then looking at the previous day, this was the previous day high. This, in fact, so this was the previous day high. So we had this previous day high also being swept. We had this previous day high swept. The previous day high has been taken. This was on Friday. We had on Thursday high taken. We had the Asian high of the Thursday taken down all inside of this, and then we are at a key level on the 4 hours time frame. So I can now look for reversal entry at this point, because I know that, like, with confidence in me, that once we've cleared out Asian high, we've cleared out the previous day high, the market normally that the market, like, it has some higher percentage chance of just a form of liquidities that have been taken in the market into a key level structure on the 4 hours. On the 5 minutes time frame, you can see a very, 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 very good. At this point, I don't even wait for this kind of structure. Let's say the market will come here, do this kind of thing, something like this, and then I'll be looking to sell. I don't even look for this kind of entry formation. I only look for single candle order block. And then, like, it must be convincing. If it's on the 5 minutes, it has to be very convincing. If it's on the 15 minutes time frame, I can just take it very well. So on this one now, we had the first SCOB at this point, but since it's on the 5 minutes time frame, probably if this next candle would have closed bearish, let's say bearish without even giving us another SCOB, I would have entered off of that candle. But in this case, we had another bearish SCOB that took out the previous SCOB. And then this one now is very convincing at this point. This was the candle I would have probably entered from, which I entered from this candle here. Something like this. And now with confidence now, because we've taken out all the Asian liquidity, we've taken out the previous day high liquidity. So at this point, I put my stop loss at that. Then I target the next 4 hour zone here. To something like this. still on the NFP, like the kind of what I, for example, this now, the same concept. We had a 4 hours level structure here, and then when the market reversed down to this structure before we bought to this 4 hour structure here, we had a level. So when the market came into that level, see what the market did. Now, looking at the 15 minutes time frame, you can see that when the market came to this 4 hours level, you can see that we took out also, this was the previous day low. We took out the previous day low liquidity here at this point. This was the Asian low. This was the Asian low. We took out Asian low too, for example. We took out Asian low too. We took out previous day low. So we had two liquidities taken to the downside. And then we had an SCOB at this level and also at the 4 hours key level looking for reversal. So if probably this 15 minutes on is not clear, I go down to the 5 minutes. And for me, you can see this kind of structure here too. For example, where we had the first leg, something like this. There was no SCOB. Then after we had this, we had an SCOB at this point here. And then we had some liquidities being taken already, giving you confidence that the market will just probably reverse. So after this particular candle, I'll wait for another confirmation candle, which is this one. So I would have taken something like this here, and then you're targeting this next high, for example, here, something like this. This is playing it safe, waiting for a second candle confirmation, or if you want, you can probably take it on this first SCOB that has been formed here. Anyhow you want to do it, but the idea and the concept is because you have more confidence because all the liquidities, their risk has been taken already. So you know that okay, the market just has to buy or it has to just sell. So those are the entry confirmations and the candlestick entry confirmations that I use. And as I tell you, SCOB candles are very, 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 very efficient in the market. This is a very clear SCOB candle. A very clear SCOB. Took out the wick of the previous candle, closed very bullish. You can enter on this candle, target your next high. This also very clear candle. You enter here, target your next low. Just something like that. So yeah, I'm done with my explanation on this. So I don't know if any of you have any question you can ask. I think my time is fast spent. I have other things to actually attend to. So, is there any question you can ask?
Any question, guys?
Sorry. Good evening.
Good evening.
Yeah, good evening. Minister Biggie Dio. Seems like we're only four, currently four. So
Yeah.
yeah, sorry, I kind of joined late, and this the whole concept around this XUV. Do you have like any um form of a rule or something like when choosing an XUV candle? Like, let me say for instance now, like, ever since you introduced this concept of XUV, I've gone to backtest it, and I found out okay, a particular combination is a little bit more efficient or increases my win rate. But it's something I want to share with you to know if it's the same way you're seeing it too. Now, let's say for instance, if you're looking for like a bullish
Okay.
SUV now, for instance, I would first of all wait
Yeah.
for a bearish candle to form with wick.
Yeah.
Then the next candle
Okay.
being a bullish candle that sweeps the low of the previous bearish candle without closing above the high of the previous bearish candle. And for me, okay,
Yeah.
like just this one that is on your screen here now, this one that I'm seeing, Can you see this bearish candle now
Which one?
swept to the low, to your left, to your far
This
right,
one?
left? Yeah, yeah, this one. Yeah, so you can see that
Okay.
bearish candle now swept to the low of this bullish candle without taking out the high of this bullish candle here.
Yeah.
So now, so that's the one I use as my XUB. Like it's in deep, yeah, that's the one I prefer to use because
Okay.
over time I've seen that this one has like a kind of it makes sense to me in a certain way, and there's this level of understanding that revolves around it too. Another thing you made mention of too that I'm really, really very, very happy that I'm here to see too is the fact is the whole concept of like having a key level and waiting
Yeah.
for a liquidity grab into that level, and
Exactly.
also an SCOB too. It like it gives this form of confirmation that that level gives
Ex,
this higher
ex,
preference to that particular
exactly.
level. That's what I've been
Exactly.
noticing with gold for the past time. Even it's played out. I actually set a pending order. I've been backtesting it, and I'm even surprised. I'm even like see, I'm like seeing you explaining that same concept. Same thing happened with NFP. There was a 4 hour
Yep.
level below a
Yep.
daily level and also below an Asian range. So it
Yeah.
both it served the
Exactly.
liquidity below the Asian range, also took out the previous day's liquidity. And it just tapped into the
Exactly.
4 hour and it moved. That's what I've been
Exactly.
backtesting now. Well, before I've been
Oh,
backtesting with only the previous days high and previous days low, but now you
the
made
low.
mention of Asian range liquidity too. It also makes sense to also incorporate that of the Asian range. So it might be sweeping both the previous day and Asian range and into a 4 hour level, and also giving you an
Exactly.
XCOB too. Ah, that's like for me a confirmation checklist. So Biggie, I'm very, very happy. And also Minister, I'm very, very happy for what you're doing and the confidence like you're giving us to know that okay, what we are doing over time we're on the right path, and if we stick to it, we'll definitely be profitable. So
Exactly. You will, by the grace of
shout
God.
out to you and each and every one of you for making this happen. And
No
yeah, thank
problem.
you.
You're welcome, bro. You're welcome. More peeps to you. And to us all.
You're welcome, big. Thank you so much. All right. If anybody has question, still have question, person should ask. If you still have question, ask him now.
Hello, good evening, Mr. Biggie and everyone in the house. This is Joshua.
Yeah.
I don't know if I'm hard.
Amen.
My network is somehow cracking.
I'm sorry
Okay,
about that.
so not actually a full question, but just wanted to confirm something. But first of all, I must really appreciate for the lecture. It's really, 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 really helping people like me. Yes, it's really helping people like me, especially in a way that I understand. I must appreciate so much. So what I'm
No
doing is
problem.
this SUB, especially in the selling, like in the sales zone, especially,
Yeah.
like how many candles does it need to create for it to be a neck? Like, does it need to have two candles closing in that direction for it to be a neckline? Maybe you are using the 5 minutes to watch or 15 minutes. Like the moment it pushes up and comes down, is one candle enough that when it come down and push up again, is one candle enough to confirm it a neckline?
Okay. I understand your question. And that is where understanding of what a zone is comes to play. What do you classify as a zone? For example, we know that a zone, for example, now this is a zone. This, let's say you have one bearish candle, and then you have the next bullish candle all inside of this bearish candle now, for example, something like this. This is a zone. One bearish candle, one bullish candle. But if this, for example, now, if this candle now closes just above, and then the next candle closes bearish, I don't know. Look, I'm coming. Let me check for a perfect example of what is not a zone. Um, okay, example now. This now I can mark. Let's say now I want to take this particular point now, this particular area now as a zone. I want to mark here as a sell zone now. I can't mark this point as a sell zone, this particular point, for example. I can't mark it as a sell zone because why? After we had this first bullish candle, this after we had this first bullish candle, this bearish candle closed immediately below the low of that bullish candle. So, but assuming this next bullish candle now, assuming this candle now closed inside of this bearish candle or closed again below this bearish candle, then this particular high now, this particular high would have been like a form of a zone. Do you get what I'm trying to explain?
Yeah, yes, I'm listening.
Okay, we have a bullish candle and then we have a bearish candle. But now we need to confirm that because you must have two candles closing in the same direction for you to confirm that that particular candle, that particular place is a zone. That is just a simple explanation. You must have two candles closing in a direction, two candles closing in a direction that you want the price to go for you to confirm that particular place as a zone. So now, after we had this bearish candle, there was no other candle supporting this bearish movement. That means this particular place is not a zone. But now, after this bearish candle, we have one candle up, we have another candle up again. So we have two candles closing in the same direction. That is why we have this particular point now, this particular low as a zone, something like this. So when looking for your double bottoms, you must have something like this. When you have like your first leg coming inside a zone, you must have two candles closing up. You understand? You must have two candles closing up. Then this now you can confirm this particular point now as a zone, as a neckline.
Okay.
You understand? Once we have a
Yes,
zone
yes.
here, let's say here is a 4 hour zone, and then you're looking for a 15 minutes confirmation. You have the market come inside, and then you must have two candles closing in this direction. And what I mean by two candles, it must not be two bullish candles. It might be one bullish candle and then a smaller bearish candle inside of that bullish candle. Once that zone is being broken, that means we have a neckline at that zone. You get?
Okay. Okay, yes.
Yes, it must be two candles, either two bullish candles or one bullish candle and a small bearish candle, like an inside back candle. You understand? Ahead to confirm it as a zone for the neckline. Or when you're looking for a sell, reverse is the case too. You invert it. When you have your push up, you must have two candles closing below, like one bearish candle and then a second bearish candle, or one bearish candle and then another bullish candle inside of that bearish candle, like let's say an inside bar. Then that particular place now confirms to you as a zone. So once that place gets broken with your third candle, then it becomes a neckline break. You can start looking for your entries just like that. You understand? Joshua, do you understand? I think his network is bad. So I think that should be all.
One last question. One last
Yeah,
question.
Oh,
Sorry.
yeah,
okay.
yeah.
So now, sorry, it seems I've been asking question a
Yeah.
lot, but um,
No, it's good. It's good.
okay. So lately, I don't know, Minister. This question
Yeah.
also goes out to you too, as well as Biggie. Now, Biggie,
Yeah.
during the week, someone posted something on the group. I think it was Scam D.
Okay.
He made mention of you staying out of the market up until I think 4 p.m. a particular window, that and that's when you find your most profitable trade. And you kind of replied that message with like an affirmation that okay, yeah, that's what you do. I don't know if that's what you actually do, but if that's actually what you do, can you throw more lights on sessions? Because I've been noticing lately throughout this week, like especially throughout this week, that most of my trade, I do take my trades during the London session, and because I'm usually busy during New York. So most of my trades comes during London, and if I'm chance to be on my charts during New York session, I might see a setup and I also take it as well. But I've noticed that lately, two trades that I took, it's either it takes me out stop loss and it goes in my direction. It takes me out stop loss and it goes in my direction. So what's your take on that? Like, what's your particular? Is there any buffer, like a range, be it on the
Sorry,
15 minutes? Sorry.
for me, I had like a network glitch, so I didn't actually get the question. I don't know if Minister got it, but for me, I didn't get it.
Okay, okay. I was still asking. Okay, I said, is there any form of a buffer or a range that you like to keep your stop loss within a particular range? Let's say, is it 30 or 35 feet? Like, depending on what's your stop loss range, and that's if you're using a neckline break or if you're using an SCOB, or what time frame do you prefer to look for a confirmation on based on a particular level? Is it on the 5 minutes or on the 15 minutes as well? And also, like, sessions, to what session do you prefer to also look for confirmation on? Is it London, pre-London, or New York session? If you can throw a little bit light on it. I think that's just why I really need to get down.
Oh, okay. So for me, I trade based on just structures, and then I must look at, am I, if we're in an, like, for me, I trade both Asian session, I trade both London session, I trade both New York session, but I only trade at key zones and just on key zones alone. For example, let me just clear this out and show you what I mean, for example, and how I place my stop loss and everything. So now, for example, now on this particular day now, let's say we were inside, we broke, for example, we broke this low. So for me, we are bearish. And then this is the target. If we are bearish, this is a zone. So if we react from here, we would come to this zone. So this is should be the target, for example. This particular trade, I took this particular trade. Why? When I got up, because since I trade Asian session, I don't normally sleep full. Like, I sleep, and then when I'm awake for maybe midnight and I see an entry opportunity, I can take. And then the reason why I took this particular sell from this point also was because after we had this reaction, I told you that when you're looking for this thing, it has to be two candle confirmation. We had this bearish candle here at this point. After this bearish candle formed, we had another bullish candle, which was inside of this bearish candle, which automatically makes this particular place a zone for me to be trading. Some This particular zone now is now a zone for me, a 4 hour zone I should be looking at. So we had the bearish candle. After we had this massive reaction down, and then then we had this bullish candle. But assuming this candle now closed above this bearish candle, this would not have been a zone for me. I would have just left the market. But now it closed inside of this bearish candle, making this particular place a zone for me. So this was Asian session. So when the market started reacting, let me mark this candle for you, and then we'll go down to the 15 minutes time frame. So for me, most times, once we have a 4 hour zone, I normally trade from 15-minute zones. So we're on the 4 hours. This was the candle I was looking to sell into. I go down to my 15 minutes time frame. And then on the 15 minutes time frame now, I start looking for my entry confirmations on the 15 minutes time frame. And then you can see that we had a very clean confirmation, and this was around 1 a.m. here. I took this trade. For example, now we had our first leg up, we had another leg down, and then we had this sweep. We had this sweep here, which now gave the SCOB confirmation candle too, something like this. So let me just take this away. So I asked myself, I'm in Asian session. Am I at the key level during the Asian session? If I tell myself yes, I'm at the key level, I'm at the 4 hours key level in my Asian session, what candle confirmation am I looking at? Am I seeing? Or what kind of entry criteria am I seeing? And as I told you, I look for only two types of entry criteria if I want to sell something like this and then a reversal or something like this. So when the market came to this my Asian zone, this one was the entry confirmation I was seeing, and then I also had an SCOB. So now the way I place my stop loss, I don't have a fixed stop loss of like 30 pips range. It is only if I'm entering through SCOB, it has to be the candle high or the candle low. So as this market closed at this point, this was my entry, and then my stop loss was just a bit above the SCOB, something like this. And then my target was down to this low here, something like this. So do you understand?
Yeah, I get. So you don't use fixed stop loss.
No, I don't use fixed stop loss. I use stop losses based on my SCOB candles, or once we do have a neckline break, and then just like that. I don't
All
have
right,
a fixed stop loss. I don't use fixed stop loss.
let me add to that. Me, I use fixed stop loss. Can you hear me?
Yeah, I can hear you.
Okay, yeah, we can hear you.
Yes. I use fixed stop loss, but the way I differentiate my stop loss is, in London session, you can see that uh, trade tends to be less volatile than New York session. You get. I
Yes,
only trade
yes,
two session, that is London and New York. Then in London session, in gold, I always use 30 pips. But in New York session, I will increase my stop loss to something like 40 to 50. You get. So, but those things I will always try to take my trade on only key zones or my area of interest. That is the only place I can take my trade. And whenever I see the kind of entry I want, all this entry that you is explaining here, I also use them too. So that is how I do my own stop loss. I don't
Oh, okay.
like don't enter trade, and because sometimes that gold particularly is very volatile. There's a time it will give you high stop loss, and you even enter the market and you will still turn back to stop you. I don't enter like that. I used to put a fixed stop loss. And remember, gold trade all time zone. Why he's saying all these things is that he used to trade only gold, and you know that gold will move in any section. But unlike other currency now, like GU, you will not see GU move. It will continue to consolidate in Sydney session. It will only move
Exactly,
in
exactly.
it will only move in London session or New York session.
Or New
But
York session. Yeah, true.
other session you see it consolidating. But
Consolidate.
gold particularly will move in all session. Once gold
Yeah,
open,
that's why I trade
once
just
gold
gold.
open, like once gold open from 11 o'clock, just give it 2 hours, then start looking for your entry from other times. You will see you will be catching gold will move. But other currency, I don't think they used to move in outside the session. You get. So I use fixed stop loss. I use fixed stop loss. When New York come, I will increase my stop loss, because then trade tends to be volatile, because you will not be making, like, sometimes you enter trade, it will stop you before going to a direction. So you tend to increase your stop loss. Then, but in London session, where trade tends to be less volatile, you can reduce your stop loss. You get.
Okay.
all right, all right, all right, all right. Thank you.
uh, Okay. Do anybody have another question?
Okay, there's a question here. He said, please, how do you know a zone will not hold, especially when it is forming W pattern or M pattern? Sometimes it will form and then fake out. Okay, the thing is that trading is a game of probability. So you can't tell the one that will work out and the one that will not work out. If not, everybody will be millionaires if they know the ones that will work out and the ones that will not work out. You understand? But the only thing that will help you is you have to look at, if it's a 4 hour zone that you're looking to trade from, you have to look at your 4 hours closing candle and then the time that is remaining for the 4 hours candle to close. You understand? And a perfect example too will still be this one now I use in making this example here. For example, what I mean by that is what I mean by that is since we had a zone at this point, this bearish and this bullish confirmation gives me a zone at this point. So I have a zone. But you can see that before this zone particularly held, the market was actually bullish. You understand? The market was actually bullish at this point. So if the market was bullish at this point, and the market was bullish and up to this point, if you don't have this idea now that okay, the 4 hours candle has not finished closing, the 4 hours candle is still in progression, is still in progression, and that it will take probably when the market was here, it will be remaining maybe like let's say 2 hours or 1 hour to the closure of the candle. If it's remaining let's say 15 minutes to the closure of the candle, or let's say 1 hour to the closure of the candle, or maybe say 30 minutes to the closure of the candle, and the market is still bullish up at this point, any form of M pattern that forms at this to close back inside of this zone. So or 30 minutes, this bullish candle will close at this point. So at that point, you shouldn't be looking for any form of entry here. But if you have maybe like 2 hours to the closure of this particular bullish candle that was here, and then you start looking for it will be like kind of a week that is closing inside of the zone. So that will probably give you confirmation now to sell. But if you're looking to sell at a particular zone and the market is still bullish, and then you have like 15 to 30 minutes to the candle closure, I don't think that any W or M that forms at that top would be a good one for you to be looking for sell or buy from. I don't know if the explanation is actually
Yeah, that is good.
clear.
But let me add some things too. If you know that you know that gold particularly used to respect trend very well. It respect trend very well. So now, if you are looking to if you are looking to buy at a particular zone and you see that the price is approaching on that zone, but you see that in 1 hour price is making something like lower low, and the lower low is coming to that zone, and in your 15 minutes or in your 5 minutes you now get double bottom on that zone. You ask yourself first, sometimes that bottom will lead to the break, like the break of that 1 hour lower low. But sometimes that double bottom will not lead to the break of that 1 hour low. It will first that double bottom in that 5 minutes. What that double bottom is trying to do is to enable the retest of that 1 hour. Yeah. But once you enable that retest on that 1 hour, if the price did not break that 1 hour zone, which is that lower low that 1 hour is creating, it will still come again and stop you. If you check, there's example, but there's no way, like I'm not going to share my screen to show you that particular example. Maybe next time I will show you. Because there was a trade I took. I'm seeing a double bottom in one particular zone, but I noticed that that double bottom I saw it in 5 minutes, but I noticed that that double bottom will not have any effect except that 1 hour changes. So I waited for that double bottom to play off. Then that double bottom went to that 4 hour 1 hour zone that is breaking lows, and still retest back and clear that double bottom. A good structure that took out 30 minutes high before I took the trade. So if to say I take the trade at the initial point I saw that double bottom, I would have gotten that trade would have hit my SL. But because I saw that, yes, you know that you need to colorate time frame such as 30 minutes can lead to the break out of 1 hour, and time frame such as 1 hour can lead to the breakout of 4 hours. Something like 4 hours can lead to the breakout of one day. So if you are trying to sell or you are trying to buy at a particular zone, make sure that if the zone, try to find the trend that the zone is taking to come to that retracement trend that the zone is taking to come to that your zone, like retracement trend that the trade is taking to come to that zone. You get? I don't know whether you get what I'm trying to say. Then if the retracement trend is in 5 minutes, if you get double bottom in 5 minutes, take the trade. But if the retracement trend is in 1 hour, allow the trade to show you a double bottom or a break of structure in 30 minutes or the same 1 hour before you take the trade, because you can easily see the double bottom in 5 minutes or 15 minutes. It will still lead to, like, it will just be a way that the price used to retest back to that 1 hour zone or 1 hour break of structure before falling again. You get? I don't know whether you guys are getting what I'm trying to say.
Yeah, yeah, yeah.
This one I'm not using any example to explain it. So I don't know if I can share my screen because the time is getting like we are having 1 hour and plus now. So you
Yeah, I
get
get, but you
the
can share.
okay. So let me share the screen and just explain that particular thing. I will just uh, finish it. Okay, let me share the screen right now. So I hope you guys can see my screen bar. Yeah, you guys can see the screen.
Yes, yes.
Yeah. So what I'm trying to say here is that, assuming that we have a a zone at this point, and price has moved away from the zone, but the price is using something like 1 hour now, and the 1 hour is breaking low to retest on a particular zone like this. So now at this zone now, you will now see something like a double bottom in 5 minutes. It is not advisable for you to take the trade, because this double bottom that will form here might be a way for the price to come back to this place and still continue down. You get? In that 5 minutes, what when you will see that this thing will break is that if you have a double bottom in the same 1 hour, or a double bottom in 30 minutes that is close to 1 hour, that 30 minutes that is very strong, that is close to 1 hour, you get, before you now start taking the trade. But if you have a double bottom in um something like um 5 minutes, it will lead to break of that 1 hour sometimes, but it's not always. Sometimes it will come to this level and continue falling. but sometimes it will lead to the break of that 1 hour before you see the trade continue going up. Uh, so that is the only one way I used to use and filter some of the double bottom. I might see the double bottom in 15 minutes. I will still ignore it because of the 1 hour, because of the way the trend is reacting. But assuming I this thing is 5 minutes, this trend is 5 minutes, and the trend is coming to this my key area, then I will notice that yes, if the 5 minutes changes, I will follow that 5 minutes. Mm. But let me just show that here.
Okay.
Like this zone, there's a place I took something like that. Think. Okay, look at this. Look at this. This is 1 hour, and this is our zone actually, but this is the zone you're supposed to mark normally. Eh? Okay, if I should go to something like 4 hours, let me know if this zone is normal. Like okay, this zone now. These two candle closing above that this level bar, and this is a zone in 4 hours. This is a zone, and this one also is a zone in 4 hours. Let me just clear this. Let me just clear. Okay, let me clear all these things. So now between here and here, already we know that we are in downtrend. We are looking for a buy. You get. I will still use another one and explain this. We are looking for buy when the price come to this level, or sell when the price come to this level and present one specific thing for us, or a pattern for us to enter the trade. So when the price come to this level, if you go to something like look at it here, something like this 5 minutes, now this 15 minutes, you can see what formed here. This is double bottom bar, which is supposed to take your trade. You get, because this breakout here and double bottom, you're supposed to buy. But the reason is that we are having a 1 hour trend here. You see the 1 hour trend breaking lows. You can see it here. So we need this 1 hours to change, or 30 minutes to change, before we know that the 30 minutes can lead to the breakout of this 1 hour. But if we want to take the trade on this 5 minutes now, because of this double bottom you see here, you take the trade will not even move to anywhere. It will only retest on that 1 hour and continue falling again and still come back to take you out. But you can see all this thing alone can take you out if you take trade. Let me just take this thing. You can see my trade here, 30 pips. If you take trade here now, assuming you take trade because of the double bottom, you see all this thing can take you out. But because of but the reason is that this double bottom would have worked. But the reason is that you can see the trend here. The 1 hour is breaking low. The 1 hour is breaking low. You need to wait for that 1 hour to change, or 30 minutes to change, because 30 minutes can lead to break of that 1 hour. So if the 1 hour now, look at the place now, you can see that the 1 hour changed the trend here before I took the trade from here. I hope you get before I take the trade from here, because the 1 hour change and this is the retest of the 1 hour. Before I take the trade, I have the confidence to take the trade. And mind you, this is a double bottom too. Before you see the trade move to this direction, this way. But if to say the trend is coming down and you now see a double bottom, why the trend sometimes you now see a double bottom, why, and the place, the time frame you see the double bottom is not the time frame that is breaking low, that the trade or the price is using to break low to come to that your zone. It will stop you many, like sometimes, like many times it will stop you before the one that will even break the trend will be few of them. You get, that's how you used to filter some of the although that's how you need to, you used to know the zone that will hold. You get, like for example here, you can still see this one. Mm? You will still know that the price, like this 1 hour, the price is like this thing is low. You get, it has been breaking low, breaking low. You can see the reason why the this thing sold. You can see the break of structure here, but you can
Mm.
still see a double bottom at this point. If I open it very well now, you will still see a double bottom at this point. Despite that it is not the key zone, but some people will take this trade because of the double bottom they will see in 5 minutes or 15 minutes. Some people will take the trade, but you can see the price come back to to this 1 hour's
Yeah.
zone here and still sell. You get, but at this point now, you see that the low now that the price is creating, the price
Like
tend to correct
we
it
have to
here.
then
You can easily you can easily enter your trade here, and it will continue going up because the price has already corrected the low at this level. Mm. I hope you guys understand what I'm trying to explain.
Oh, congrats, man. Finally, you don't go.
Yes,
Say
boss. Yes,
congratulations,
boss.
yeah, finally. You
All right, that is the thing I was I'm trying to explain here. So I don't know, Biggie. I hope you are still online because we still have another question here. The guy don't jack back.
don't give me the
But
genius.
I
I
don't
go
know
go
if I should answer all these questions. Mm. Biggie,
and
I don't know if I should answer all of these questions.
mm. Wow. Wow. You
Let's call it a
need a
day.
crown.
All right, guys. See you guys next time. So you can still ask your question in the group if you have any question too. Then I beg, always subscribe to the YouTube channel. I beg, always subscribe so that we
Yeah,
will
well,
see reason to
I'm not sure
do
we can
these
should you.
things. All
Okay,
right.
sir. Good night, sir. Thank you so much.
Good night. Good night.